What's up, guys? It's your finance boy, PV Rajan. I know a ton of you have been hearing about GameStop, BlackBerry, AMC, and stocks like this just absolutely skyrocketing right now. You may have also heard in the media headlines like, Redditors are pumping the stock price, these kids are getting together, manipulating the market, all kinds of random media headlines like that. But what is happening here is so much more than what the media is telling us. This is an historic event that we are witnessing. So after years of being pushed around by the big boys on Wall Street, the hedge funds of the world, the retail investor is finally fighting back. In typical scenarios, we've been the ones left to take the L, to hold the bag, while Wall Street has gotten bailouts and used government funds to pay themselves big bonuses. You know, the people have finally decided enough is enough. Let's fucking stick it to these guys. What we're seeing right now is absolutely epic. A war against Wall Street. So, should you jump in on the hype? Is GameStop gonna hit $1,000 per share? Is this all just gonna plummet? What the heck is going on? Stay tuned to find out. So when it comes to investing in stocks, you typically have the two most common positions, the long position and the short position. The long position is the one that you're going to be more familiar with because when you're long on a stock, you're purchasing it with the hopes that the stock's going to increase in value and you make a gain from that price appreciation. Now, the short position, in very simple terms, is essentially when you want the stock to go down. If you're taking a short position, you make money when the stock decreases in value and you're essentially betting against the stock. So let me break this out into an example for you. Let's say you currently have the brand new iPhone 12. It's worth $1,000. Now, if I were to take a short position with you, I would borrow your iPhone 12, which currently costs $1,000, and I'm going to go ahead and take it and sell it on the open market right now and collect $1,000 for that iPhone 12. I'm now indebted to you an iPhone 12, not $1,000. I owe you one iPhone 12. So a year from now, when the iPhone 12 has now dropped in price and it's worth $700 for an iPhone 12, I'll go ahead, buy an iPhone 12 for $700, give you back the iPhone 12, and I've now made a $300 profit from doing this short position with you. I borrowed your asset, liquidated it, bought it back at a lower price and gave it back to you and paid off my debt and made $300. That's essentially what's happening when you're shorting stocks. You're borrowing someone else's stock at a certain price, you liquidate it at that price, and then when you ultimately close out your short position, aka repay that debt and pay them back a stock, you're gonna go buy it at a lower price, pay it off, and settle your debt. So essentially, the more the stock price drops, the more money you make when you're in a shorting position. However, when it comes to being long on a stock or short on a stock, there's one key thing you need to know. When you're long on a stock, your upside is not limited. So what I mean by upside is the most money you stand to make is not capped at a specific percentage. If your stock were to double in value, you've made 100%. If it's tripled in value, you've made 200%. Quadrupled, that's 300%. Your upside can keep going as long as the stock price continues to rise. However, when it comes to shorting, you're borrowing it at a certain value and then you make your money as that stock price tanks. So let's say you shorted a stock at $1,000 value and you rode it all the way down to zero. You've made 100% return, but you're capped at that. You can't go more than 100% in the short scenario. However, your downside when it comes to shorting is that let's say that stock now doubles, you've lost 100%. Let's say that stock triples, you've lost 200%, 300%. So your downside is not capped, but your upside is capped. Key thing to note. Before we get into what's happening with GameStop and the crazy meteoric rise of this stock, let's talk about this Reddit forum called wallstreetbets. So wallstreetbets initially started off as a Reddit forum where a bunch of day traders and retail investors and even some people who work on Wall Street would get together and essentially gamble. These guys would take some ballsy stock picks that they had up their sleeve, invest a crazy amount of money into it, and either make a fortune or lose their entire life savings. So not a lot of wise investment advice was going here. That's why they would call it Wall Street Bets, not Wall Street Investments or Wall Street Stock Picks. Wall Street Bets, it's gambling. So one of the users, Deep Fucking Value, came out and posted that he was of the opinion that GameStop was currently overshorted. The price was around $4 a share, and he noticed that a lot of people were short on GameStop, thinking that the price would continue to go below $4. And he was of the belief, based on his actual financial analysis and understanding of the company and their operations, that the stock wouldn't go below $4 and would actually start to make a small comeback. He was initially anticipating maybe doubling his money or tripling his money at most. So he went ahead and made a bet and dropped $50,000 of his money on a long position on GameStop, thinking that the company would increase in value, while a ton of these Wall Street hedge funds were short on GameStop, thinking that the price would go below $4, and that's where they stood to make money. So time starts to pass by, and Deep fucking Value was correct about his bet. His gamble was paying off. By July 2020, he had made 5 times his money on his GameStop Wall Street bet and was in the green significantly. So around this time is when more people started to find out about the ginormous short positions that hedge funds had taken against GameStop. So if you refer back to what I had said about shorts, when you're in a short position and the stock price starts to go up, that's when you start losing money. So the Redditors of Wall Street Bets came together and decided, fuck Wall Street. These guys have left us to hold the L for so many years. It's our time to give them a kick in the ass. So what they started to do was start pouring money into GameStop and pumping the stock price up. As the price started to rise, the amount of loss that the hedge funds were taking started to increase significantly. So to make things even more clear, let's say one of these hedge funds got into their short position at $4 a share. If the stock price went from $4 to 0, they'd make 100% on their money. So if they invested $1 million into a short position at $4 and it went down to 0, they'd make $1 million, for example. Now, some of these hedge funds did this, but they put billions of dollars into the short position. Now, when you pump the stock price up to, for example, $400 US, that hedge fund has lost 100 times its money. So by squeezing them out of these short positions and causing them to bleed, some of these hedge funds are getting absolutely decimated and taking historic losses which they've never taken before. There's memes on the internet like, guys, we're hurting people who own 6 boats. Like, the animosity towards the rich right now and the hedge fund billionaires is real. The retail investors are fighting back. And if you really think about it, where does this animosity for Wall Street come from? Why are so many people like, Wall Street? Why do they really want to stick it to them in this scenario? Let's look back to the 2008 mortgage crisis, in which Wall Street had designed mortgage-backed securities and were selling these to the retail investors and to the investors of the world. Something that was super risky, something that wasn't backed with good, correct fundamentals. They were making money hand over fist. And when the housing market started to crash, not only did Wall Street continue to sell these investments to retail investors, they also took a short position so they can make more money on the decline while still selling these investments to retail investors so they could lose more money. Another thing to note was that Wall Street were the ones who were taking these crazy risks and in the end got a government bailout and walked away from the crisis with huge bonuses in their hands. Management took these government bailouts, paid out huge bonuses to their investment bankers who fucking caused this thing, and who were the ones who paid the price? The retail investors, the people with their homes. You know, a lot of these Wall Street bet users who are holding the line and pumping this stock right now and saying fuck Wall Street, their dads lost their jobs, their moms lost their jobs, they lost their homes. Some of these kids were left on the streets, and this is their chance for them to get back at these guys who did not have to answer for this or pay the price for their previous mistakes. So the overall goal with this is to squeeze the hedge funds out of their short position. So what I mean by this is pump the stock up so much that they're losing and bleeding a crazy amount on their short position that eventually they say, okay, we give up. They close their short position, pay the cash and take their loss and walk away. That's the goal, and that's what the retail investors are trying to accomplish right now as they battle it out with Wall Street. Continue to hold strong, push the price up, and essentially squeeze the Wall Street hedge funds out of their short positions. So one thing I do want to say is, even though this cause can be interpreted as noble or fighting back against the market manipulators playing their own game that they've been playing for years, I gotta say this is still market manipulation, right? The stock is absolutely being pumped up. GameStop fundamentally, if you do your due diligence and read through the financials, is a dying company per se. Their revenues have dropped. There's no reason for this company to be worth this price other than the fact that people have joined together and are putting money into this company. So the retail investors, the Redditors, are continuing to buy more shares of GameStop. They're pumping up the price. And what happens? Wall Street fights back dirty. They realize that a majority of the retail investors, especially based out of the United States, are using a platform called Robinhood in order to buy their GameStop shares and pump the price up. So they make some calls and essentially, long story short, pressure Robinhood into disabling buyers from purchasing GameStop and being able to pump the price up. So what happens when they were able to do that? The price starts falling and they start making more money on their short or recovering some of the losses that they have on their short. Pure manipulation. They're able to use their power and clout to do that. There's rumors that even the White House made some calls to Robinhood to pressure them into doing this. Completely unfair. Again, it's a David versus Goliath battle, and these guys have the power to do that, which should frankly be illegal in my opinion. However, there are class action lawsuits and all of that jazz pending on this very action. So what's even more interesting, there's a company called Citadel, which is essentially a brokerage. So when you submit a trade through Robinhood, that trade is executed and the actual stock exchange and transaction happens through Citadel, which then fulfills the order. So for them, they're making money every time a transaction takes place. So when we're buying the stocks, they're making money. When short positions are being taken, they're making money. Think of it as like a Visa. Every time you swipe it, there's a 2% charge that's coming in, right? They're making money either way. However, they have a huge interest in a hedge fund which has a massive short position against GameStop. So these guys, using their pull, are able to tell Robinhood, no, stop selling GameStop shares using your platform in order to stop purchase activity and thus have the stock price tank, so then they could recover losses or make money on their short position. That's a rigged game if I'd ever seen one. Fucking bullshit. However, they have the power to do that, and that's literally what happened. That being said, will GameStop hit $1,000 a share like some people on the internet are projecting? Maybe. It really depends on if people continue to sink money into it and really pump the price up to that level. Will they be able to do that? It's up for pure speculation, and that's why I consider this to be gambling. So if you want to gamble, sure, get into GameStop and gamble. Maybe you'll win some money. It's like playing a hand of blackjack. It's like playing roulette. I personally, normally when I go to Vegas, I'm down to lose $1,000, and that's what I play with. So I put $1,000 into GameStop just so I can gamble. Do not invest. This is not investing. Now, that being said, where do I see the end game for this? Eventually, let's say that the retail investors, the Redditors, they're able to accomplish their goal and squeeze the hedge funds out of their short positions. Now they're all done, mission accomplished. Once they all start selling their shares to start locking in their profits and actually taking their gains home, the stock price is going to be tanking right away anyways. And at which point, maybe Wall Street can jump in and start taking a short then. So at the end, there will inevitably be a drop, because at the end of the day, GameStop is a shit-ass company and they have nothing going for them. They're not worth $400 a share. They're not worth $1,000 a share. So once that sell-off starts happening, there still will be some retail investors holding the bag. But unfortunate for them, unlike Wall Street, there won't be a government bailout when this happens. The retail investors are not going to be bailed out by the government to stop their losses or to recover their life savings. Only Wall Street gets that treatment. So fundamentally, there's still an issue here with this thinking. So my key takeaway is, if you want to jump in on GameStop, again, it's complete gambling. So if you're willing to gamble and lose what you're putting in, put your cash in and see what happens. Otherwise, continue to invest as a smart investor. Do your due diligence on companies, read the financials, and make solid investments in companies that you believe in long term. Even Deep fucking Value, when he took this first long position on GameStop, he took it because he didn't believe in the company long term per se, but he believed that it wasn't going to go below $4 and that he stood to make money because the company, based on its financials and its operations, was worth more than $4. So if you guys enjoyed this video, make sure you smash that like button, and if you're not already, subscribe to my YouTube channel. I'm going to be posting a lot of great content on real estate, personal finance, and entrepreneurship. I'll see you guys in the next video.